Second is keep or drop. It uses relevant cost analysis to determine whether a segment or a line of business should be kept or dropped. The traceable income or loss determines whether a segment should be dropped or kept. If the product or segment margin is positive, then the segment is kept. Otherwise, if it is negative, then the segment may be dropped. An example illustrated here. Vanderbeek has 3 product lines. Last year's data in thousands are as follows. So take note of the 3 product lines of Vanderbeek, together with its sales, variable cost, unavoidable fixed costs, and avoidable fixed costs. And you can already see here that variable costs, unavoidable fixed cost, avoidable costs and variable costs are the only relevant costs here.
Now, the question for this problem is that would Vanderbeek company retain or drop the product line Prestige because of its negative income? Now, we'll see. First, let's identify the relevant and irrelevant costs. Now, the relevant cost is the sales, variable cost, and avoidable fixed costs, while the irrelevant cost is the only unavoidable fixed cost because it will still be incurred regardless if the Prestige is dropped or retained. And with that, we can already move on to the decision-making analysis. Now, the first solution is presented here in incremental method. Now, observe that the sales is 230 pesos and the variable fixed cost 120 pesos and avoidable fixed cost which is 80 pesos, and we'll get the segment revenue 30 pesos. Now here, what does this mean? It means that if we drop the product line, we would keep the product line, we will still be able to get a segment revenue of 30 pesos. Now in the given problem, in the illustration, it was stated there that the revenue or the net income is negative 30 pesos. That is because the unavoidable fixed cost is allocated to the Prestige. Now if we consider only the relevant costs, we'll get a segment revenue of 30 pesos. So that is for the decision. The decision is to keep the product line of Prestige. Now the second solution is presented here in totals. Now here, it was already in the slides, in the example slide, there's a total column, so you can just make a reference for that. And here, so the total with Prestige is the same with the column in the example, and also there's a second column which is totals less the Prestige. Now why do we deduct the Prestige? Because we consider dropping it already, and so in the sales we deduct the sales for the Prestige, because if we drop the Prestige we will also lose the sales as well as the variable costs or the variable savings, but the unavoidable fixed cost will still remain the same because it is an irrelevant cost. Either we drop it or either we keep or drop the Prestige, we will still incur the fixed cost. And unavoidable fixed cost or the fixed cost savings is here. 210 minus 30 is equals to 80 pesos of fixed cost savings. Now get the difference of the total net income of the totals and the total less Prestige. I will get also the same answer, which is 30 pesos. Now if we drop the product line of Prestige, we'll get a zero net income, which is due to the contribution margin, lost contribution margin or lost sales of dropping the Prestige. But if we keep the Prestige despite of its negative net income, we will be able to get a total net income of 30 pesos. And therefore, it is more convincing with the two given solutions that it is safe and it is more advantageous to keep the product line of Prestige rather than dropping it, regardless if the net income of Prestige shows a negative net income. And that is for the keep or drop